by Manisha, the one point. So the rest of the 3 points which I will discuss is one of them is why should one choose public sector bank ahead of the private sector bank? So see, there are a couple of reasons, and the first and the foremost reasons which comes in mind as a general people is that when they are keeping money in the banks, they want a safe, whether it's a general people or a high network individuals. So they want a certain security. So the government, because you see when the customers like me and like the general people, when they put money in the banks, so they want that their money is safe. So the one thing which really intrigue in their mind is that because they have the a bliss, or not a bliss, like they have on the top of the head there is a government. So because they doesn't have to fear about when any financial crisis or any financial problem happens, they know that the government will gonna come in and gonna resolve the issue. And the second point, which is the less hidden challenge, which I'm going to be discussing on the next slide. Every product has a different, a very minimal hidden charges which are in the public sector products compared to the private sector products, and also very minimal deposit which you need to keep in the saving bank account. If you compare with the private sector bank, you need to maintain around 5,000 to 20,000 amount, and if it is necessary you need to maintain that. But in terms of public sector bank, you doesn't need to maintain that much of high amount. You just need to maintain 1,000 or 2,000 depending on the banks. And if you are a student, you doesn't have to also maintain that 1,000. It can be also zero balance account. So next. So who gives the best deal in loans compared to the private sector bank and the public sector banks? Processing charge. See different. See the major differences between the private sector bank and the public sector bank is, the private sector bank has a DSA facility, that is a uh, direct selling direct selling agent, DSA, that is DSA, direct selling agent. And what they do is they provide a home loan. Home means what they do is that the employer visit directly to the customer's house and to provide a home service. Like if you want a loan, you can simply call the customer care and they will send the DSA. And in doing so, the private sector bank charge extra processing fee. It will charge around 0.50 to 1% of processing fee. And they charge because they also have to maintain certain, because they have also need to pay certain amount to the agents also. But in the private sector bank, you go, they doesn't charge any big, they doesn't entertain such DSS services. So in doing so, they doesn't even charge amount like 50.50 or 1%. They merely charge 0.25%. Interest rate fluctuation. See, you must have heard about when the interest rates of a bank goes, as soon when the bank's interest rate goes, it means that the RBI's repo rate has also increased. But the bank doesn't decrease with the same speed when the repo rate decreases, because see, they doesn't do, and see, it's mainly with the existing customer who has. But with the public sector bank, it's immediate. The fluctuations happens immediately. They decrease very immediately. Prepayment charges. Public sector bank, see, when you sign a term and conditions, you need to understand that the private sector bank doesn't entertain any prepayment services, because even if you want to pay, they will charge a certain prepayment charges. So they doesn't do so because when you do so, the bank loses some interest on doing so. So just to mitigate that loss, they charge around 2% of the outstanding amount. An outstanding amount. See, if I have to take an example, see, you have a outstanding loan on, suppose, an Axis Bank of 10 lakh. So if you want to a prepayment, you want to prepay a certain amount, like you say 2 lakh. So you have, the bank will charge around 2%, that is on the outstanding balance. Now it's an 8 lakh, because since you want to pay 2 lakh, so it becomes, the outstanding loan is 8 lakh. So the bank will charge 2% on 8 lakh, that becomes 16,000. So you need to pay 16,000 as a penalty just to pay a 2 lakh of a loan amount. So this is the major differences between prepayment charges. So in the public sector bank, you doesn't have to. The bank doesn't even charge a penny for it. So it's a previous. So prepayment period. So when so having discussed about the payment charges, there is also one more clause which is hidden in the loan paper, and that is the prepayment period. So prepayment period says that you cannot prepay, means in terms of the private, I'm talking about the private sector bank. So in terms of the private sector bank, they doesn't even, you cannot prepay any amount before 6 months. If you want to prepay before 6 months, it's gonna be hectic for any individual, because the EMI are planned in such a way that if you want to pay interest rate initially, it's gonna be much more costlier than if you want to take a public sector bank, because public sector bank, you can, even if you have if you have taken a loan today, you can start paying from day after tomorrow. So that's one more things which we can stick with the private public sector bank. The last but not the least, it's the prepayment amount. See, in the private sector bank, they only entertain an amount like 25% of the full amount. You can, in a year, you can only pay a 25% amount. That is, if you have if you have an outstanding loan of 10 lakh, you can only pay 2,50,000 in a year as a prepayment amount. But in public sector bank, these restrictions are not there in public sector banks. So next slide. So as a conclusions, I want to say for a normal customers that what are the products and what we should, as a banker, what we should provide to the customers. See, when a customer, you should try to get a product whose cost is as low as possible, both in a short term and the long term, because it takes you need to take it wisely, considering about the facts which I've discussed in the last time. So there are a lot of charges which are involved in the loan, incurring from the beginning to the end. There are small tenure, like if you want a normal small personal loan or any car loan, so they doesn't charge much. But if you go with the long term, like the home loan, because it goes maximum as 20 years of tenure, so where you will have to bear a lot of obstructions, not obstructions, like you'll have to pay a lot of interest. So in doing so, you need to the above points which I've discussed, you also need to think about that. That's all.